This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
About 24% of crude oil production and 18% of natural gas output in the U.S. Gulf of Mexico was shut in response to Hurricane Helene, the U.S. Bureau of Safety and Environmental Enforcement said on Friday. Oil and natural gas production losses fell for the second consecutive day after reaching a peak of 511,000 barrels on Wednesday. Energy producers had shut in 427,000 barrels per day of oil production and nearly 343 million cubic feet of natural gas from Gulf waters, the Bureau said. 9 oil and gas platforms had been evacuated as of Friday, about 2.4% of the Gulf of Mexico total, the offshore regulator said, citing reports from producers.
Oil prices settled higher on Friday but fell on the week as investors weighed expectations for higher global supply against fresh stimulus from top crude importer China. Brent crude futures settled up 38 cents, or 0.53%, at $71.89 per barrel. Front-month U.S. West Texas Intermediate crude futures settled up 51 cents, or 0.75%, at $68.18. On a weekly basis, Brent settled down around 3%, while WTI fell by around 5%. China's central bank on Friday lowered interest rates and injected liquidity into the banking system, aiming to pull economic growth back toward this year's target of roughly 5%.
Moving on to the top news in the energy sector.
The European Union announced changes to its rules governing auctions for hydrogen grants in an effort to limit EU dependence on China in its renewable energy supply chain, the new terms published on Friday showed. China has become a dominant force in solar and electric vehicles, and is increasingly competitive with European wind power producers. The European Commission is taking steps to limit creating a systemic reliance on Beijing with new rules, investigations and possible tariffs on Chinese EVs. The EU's Hydrogen Bank will run its second renewable hydrogen auction on December 3 to provide up to €1.2 billion, $1.34 billion, in grants to new projects.
Russian Deputy Prime Minister Alexander Novak said on Friday that Russia has sufficient stocks of oil products. Approximately 1.9 million metric tons of gasoline and 3 million metric tons of diesel, Russian state TV network reported on Friday. Russia planned to increase gasoline production by around 4 million metric tons and diesel production by around 30 million metric tons in coming years, Novak added. Next, we have the top news in metal markets. India's leading steelmakers group warned on Friday of a further increase in imports from China following a U.S. decision to impose 25% tariffs on Chinese steel imports. U.S. President Joe Biden's administration this month locked in steep tariffs on Chinese imports, including 25% on steel and aluminium that kicked in from Friday. The increased trade remedial tariffs on Chinese steel by U.S. is further going to impact the Indian steel industry adversely with diversion directed to India, Alex Sahay, Secretary General of the Indian Steel Association, ISA, told Reuters.
Leading mining companies are struggling to balance investor expectations for hefty returns with paying the necessary premiums to buy pure-play copper companies as global demand for the metal sends valuations soaring. Big diversified miners including Rio Tinto, BHP Group and Glencore, pressured by a slowdown in global economic growth and falling commodity prices, are watching rival copper producers gradually grow beyond their reach, with shares benefiting from the metal's robust outlook. While shares of Rio, BHP and Glencore have slumped between 10% and 15% this year, the valuations of pure-play copper producers including Freeport-McMoRan, Ivanhoe Mines and Teck Resources have risen, even as benchmark copper prices retreated after hitting a record high above $11,000 a metric ton in May this year.
We will now look at the top news in the agricultural sector.
The European Commission on Friday reduced its forecast for usable production of common wheat in the European Union in 2024-25 to a 12-year low as it continued to factor in adverse weather in the bloc. The Commission now estimates production of common wheat, or soft wheat, this season at 114.6 million metric tons, down from 116.1 million predicted a month ago and 9% below last year's crop. It is also the lowest volume since 2012-13, bringing the Commission into line with other recent forecasts of the EU's main cereal crop.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.